Ever feel like you're always a step behind in the markets? Like there are these pro traders out there reading the signs, making the big moves while we're left wondering, how did they know?
That's exactly what we're diving into today, something called the ICT smart money technique.
Okay.
We're taking a deep dive into this YouTube video you shared, ICT Forex, the ICT smart money technique, or SMT, from the channel The Inner Circle Trader.
That's good.
The video, it basically breaks down how to potentially anticipate those big market swings,
Hmm.
and it all comes down to the US dollar index and how it interacts with foreign currencies.
Interesting.
SMT is all about spotting these things called unexpected price actions. And that sounds a little, well, unexpected, right? But
Yeah.
think of them like hidden signals, these little whispers in the market that most traders miss. The example they use in the video is the Aussie dollar and how the SMT could have actually helped you predict a 1 to 50 pip move.
Wow, that's a significant move.
Right. That's the kind of thing that makes even seasoned traders sit up and take notice.
Absolutely.
So to explain all this, the video uses this really simple analogy, a playground seesaw.
Okay.
One side, that's our US dollar. The other side, that's, say, the Aussie dollar.
Right.
Now, normally you'd think if the dollar goes up, the Aussie dollar should go down, right?
Yeah.
To keep things balanced.
Makes sense.
But sometimes, and this is where it gets interesting, the Aussie dollar, it doesn't go down like it should.
It does its own thing.
Exactly.
Yeah.
And that's our signal. That's the market telling us something's up.
So it's like the unexpected is the clue.
Exactly.
Mhm.
So in the video, they break down this Aussie dollar example step by step,
Hmm.
and they actually show you the charts so you can see exactly what they're talking about.
Oh, that's helpful.
Yeah. So first, they identify these price levels on the Aussie dollar daily chart, what they call a bullish order block.
A bullish order block.
Yeah, it's basically like a zone where you've got all these big buyers just waiting to jump in.
Got it.
Then they look for these things called liquidity pools. These are like little dips in the price before it shoots up even higher, almost like a confirmation of that bullish signal.
Interesting.
But the real aha moment, the part that really clicked for me, is when they overlay the US dollar index hourly chart on top of the Aussie dollar chart.
What happens?
So the dollar, it's making higher highs, which is what
Yeah.
you'd expect, right? But the Aussie dollar, it's refusing to make those lower lows.
So they're diverging.
Exactly.
Mm.
And that divergence, that's the heart of the SMT. It suggests that something big is brewing, what the video calls massive accumulation,
Leaning.
meaning smart money, those big institutional traders, they're quietly loading up on Aussie dollars, even though the dollar itself is getting stronger.
That's really interesting.
Right. It's like they know something we don't.
So this SMT, it's not just about like spotting a single trade.
No, not at all.
It's about understanding how those who really move the markets, how they think, how they act,
It's about seeing the market from their perspective.
seeing the signs they leave behind.
Yes. And then, potentially profiting from it.
That's the idea.
Okay, so we've seen the bullish side of the SMT. Right. But what about when things are headed down? The video uses the British pound, or cable, as an example of a bearish setup.
Okay, so this is where our seesaw analogy gets flipped on its head.
Exactly. Imagine the dollar side of the seesaw, it goes down.
Yeah.
Right? So naturally, you expect the cable side to go up.
Right, to maintain the balance.
But what if it doesn't? What if cable just sits there like it didn't get the memo?
That would be unexpected.
Exactly. And that's our signal. This time, it's signaling weakness in the pound.
Because it's not reacting the way it should.
Precisely. The video calls this a false move. And this is where savvy traders, those who are paying attention, can really capitalize.
By going short on cable.
Exactly.
Mm.
They see this hidden weakness, this crack in the facade, and they're ready to pounce when the market finally breaks.
The SMT, it's like having X-ray vision for the market.
I like that. It's about seeing what others miss, understanding those underlying forces that drive price.
It's about leveling the playing field, giving yourself an edge.
So we've got these unexpected price actions.
Right.
We've got our seesaw analogy.
Okay.
But how do we actually put this into practice? The video mentions these things called order blocks and liquidity pools.
Yeah, I was wondering about those.
Those seem to be key to really pinpointing those high probability trading zones, those areas where the SMT signals are most likely to play out.
They're like pieces of the puzzle, right?
Exactly. So an order block, it's basically a price level or a zone where a bunch of buy or sell orders are all clustered together.
Okay.
And these are often like footprints left behind by the big institutions, the whales of the market.
So they're showing us where the big money is moving.
Exactly. And when the video talks about bullish order blocks, those are zones where you're more likely to see, big buyers stepping in.
Got it. So when the price dips near one of these bullish order
It's
blocks,
like ringing a dinner bell for those big buyers.
they see a bargain and they jump in, pushing the price back up.
Exactly. And then we've got these liquidity pools. Remember those little diffs we talked about where the price drops below a key level and then quickly bounces back up?
Yeah, like a head fake.
Exactly. Those are often areas where a lot of traders have set their stop-loss orders.
Yachar.
Basically, those are orders that automatically sell if the price falls to a certain point to limit potential losses.
Right, like a safety net.
Exactly. And when the price dips down and triggers those stop-loss orders, it can create this, chain reaction, fueling even more buying pressure. So we've got these unexpected price actions, order blocks, liquidity pools. It all ties together.
It's like a system for reading the market's mind.
Right. But is it really that simple? The video kind of glossed over the risk management part.
Ah, yes. Risk management, always crucial no matter how good a strategy seems.
So what are some things traders should keep in mind, especially with a technique like the SMT?
Well, the golden rule is never risk more than you can afford to lose on a single trade.
That makes sense.
It's about protecting yourself.
So you don't blow up your account if a trade goes against you.
Exactly. And that's where those stop-loss orders come in handy.
Right, setting a safety net below your entry point.
Precisely.
Now, one thing that really caught my attention was when the video hinted that the SMT can be applied to other markets, not just currencies.
Yes, it's not just about Forex.
So we could potentially use this to spot opportunities in stocks, bonds, you name it.
Theoretically, yes.
Because it all comes down to understanding those underlying forces of supply and demand.
Exactly, and those forces are at play in every market.
So the SMT, it's like this universal language we can use to decipher market behavior no matter what asset class we're looking at.
That's a great way to put it. It's about learning to see those hidden signals, those whispers that most traders miss.
So for someone who's just starting out with the SMT, what advice would you give them? Where do they even begin?
Well, I always say, focus on the why before the how.
Okay, meaning?
Don't get bogged down in the technical details right away. Start by understanding the core principles.
So really grasping the concept of those unexpected price actions, those order blocks, those liquidity pools.
Exactly. Focus on the big picture first.
And then, once you have a solid foundation, you can start to delve into the more technical aspects.
Right.
It's like learning a new language.
Exactly. You wouldn't try to write a novel in a language you just started learning.
Right, you'd start with basic vocabulary, basic grammar.
Precisely.
So observation is key.
Absolutely.
Spending time watching the charts, looking for those telltale signs.
Exactly. Become a market detective.
Look for those clues, those footprints that suggest something bigger is happening beneath the surface.
And don't be afraid to ask questions.
Right. There are tons of resources out there, forums, communities.
Connect with other traders, share ideas, learn from each other.
And be patient with yourself.
Yes. Trading takes time and practice.
It's a journey, not a destination.
Exactly. There's always something new to learn, another layer to uncover.
Speaking of learning, what about those times when the SMT doesn't pan out? When those unexpected moves turn out to be, well, just unexpected.
Those can be tough pills to swallow, right? But they're also incredible learning opportunities.
So it's not about being right or wrong all the time.
It's about understanding why something happened, whether it went in your favor or not.
So when those unexpected moves, when they don't go as planned, how do we dissect those situations, without losing our confidence?
The key is to treat every trade as a learning experience, win or lose.
Okay, so even if a trade goes against us.
Especially then. That's when you really want to dig in and analyze what happened. Was there something you missed? Did you misinterpret a signal? Did you manage your risk properly?
So it's about turning those losses into, valuable data points.
Yeah, precisely. Every trader makes mistakes. It's how we learn from them that sets us apart.
So short memory for the bad trades, but long memory for the lessons learned.
Exactly. And don't be afraid to adapt your approach as you gain more experience. Remember, markets are constantly evolving.
You've got to stay nimble.
Absolutely. What works today might not work tomorrow. That's the name of the game.
Now, before we wrap things up here, you mentioned that the SMT could be applied to other markets. Like you've piqued everyone's curiosity now.
And for good reason. The principles behind the SMT, they're not limited to currencies. You can apply these concepts to stocks, bonds, even commodities.
So instead of just looking at the price charts, we're looking for those underlying imbalances in supply and demand.
Exactly. Those imbalances create the opportunities, regardless of what you're trading.
So whether it's a currency pair, a stock, or a commodity, it's all about understanding how those big players are positioning themselves.
It's about seeing the market through their eyes, anticipating their moves.
And the SMT gives us the tools to do that.
Precisely. It's like learning a secret language, one that allows you to decipher those hidden market messages.
This has been eye-opening. We've covered so much ground today, from those cryptic market signals to the psychology of big players.
And the beauty is, this is just the tip of the iceberg. There's always more to learn, more to explore.
So to everyone listening, keep digging deeper. Keep asking those what-if questions.
And remember, the most valuable asset you have in trading isn't some fancy indicator or secret system.
It's that constant thirst for knowledge.
Exactly. Embrace the learning process and never stop challenging yourself.
I almost said it better myself. Well, on that note, this has been an incredible deep dive. Thank you so much for joining us today and sharing your expertise. Until next time, happy trading, everyone.